Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, SpaceX pitches a $28.5 trillion opportunity from AI to Mars ahead of an all-time blockbuster IPO. We break down the S1. Plus, Nvidia fails to reignite the AI trade as CEO Jensen Huang pushes to diversify the chipmaker, saying AI is set to go mainstream. And another major IPO on the horizon, OpenAI preparing for a filing which could come as soon as tomorrow. Let's get straight to our top story. SpaceX has publicly filed for an IPO and in the process disclosed billions of dollars in losses along with a super voting share structure that would give Elon Musk sweeping control over the company. The ticker will be SPCX. The filing also underscores just how ambitious SpaceX believes its future could be. Today's big number, $28.5 trillion, the total addressable market the company says it's pursuing, according to the documents. Let's get more on SpaceX's IPO and on Starship at the heart of it. Bloomberg managing editor for Space, Benedikt Kammel, Bloomberg deals reporter, Ryan Gould. Benny, I start with you. We learned a lot about the reality of where SpaceX's business is right now. So let's start there. The numbers that jumped out of you as we poured through the document and went through it with a fine-tooth comb.
Yeah, I mean, you've already mentioned some of them, and the one that really was a bonkers number, let's say it, is the total addressable market, the market they're targeting just shy of 29 trillion. So that's one number that I think everyone sort of gulped at. But also on the other sort of end of the spectrum, the sales and the loss are actually not that great. So you've got a company here with quarterly sales of just shy of 5 billion and with a loss that's not that dissimilar. So for a company with those kind of numbers to seek a valuation of 2 trillion, that is obviously pretty steep. We then saw what Musk is trying to sort of retain, the control he's trying to control. He wants to retain in the company about 41% of control that he wants to keep. So that obviously gives him a really hard sort of control of the company. So he's the man in charge and he will remain so going forward.
The debt pile, $29 billion. I want to get into how this IPO is going to work. Ryan, what do we confirm about the banks? Who's lead left, who's lead, and who's behind? But also, like, the roles. Because if this is going to be the biggest IPO of all time, dollars raised or valuation doesn't matter. In your world, it does matter who's trying to pull it off.
It does, Ed. And, there's been so much said and written over the past, 2, 3, 4, 5 months around who's actually going to be, quote-unquote, leading this deal. I mean, if you look at the S1, Goldman Sachs is in that plumb left position. To the right of them are Morgan Stanley, Bank of America, Citigroup, and JP Morgan, the last three sort of in alphabetical order, as it were. But, I think if you're Goldman Sachs, you're looking at this and saying this is a great marketing win for us. We are the preeminent franchise for IPOs in technology on the street. And then you're Morgan Stanley, who maybe is saying, well, we've done a lot of work for Elon Musk over the years. What does that mean for us? Well, if you actually dig down into the filing, you can see that Morgan Stanley does have that stabilization agent role, which I will say, is not something to, really pass over. The stabilization role is crucial to trading that very first day flow. And in some cases, that could be up to 20 to 30% of that flow on day one. And they're obviously going to take a certain cut of that revenue. So, it comes down at the end of the day to sort of marketing versus economics. I mean, our understanding is that the economic structure in terms of who's getting the fees is roughly equal. But if you're Goldman Sachs, you're able to go out to your investors and say, or your shareholders and say, we are leading the biggest IPO of all time. And that's clearly huge.
And we got the reporting that David Solomon, Goldman CEO, slid into Musk's DMs to get that win. Benny, the other important thing is who controls this company. What do we learn about Elon Musk's voting power?
Yeah, so he retains absolute control over the company, overall about just north of 40%. Some other interesting investors in there. We're not quite sure what the role of Google is. They're obviously an early investor in this, but this is a company that will mint lots of billionaires and possibly the first trillionaire if Musk gets his way, if the pricing turns out as hoped. And he could really get into a very different stratosphere altogether if he gets those bonus shares. That's something that was also teased yesterday. If you manage manage to actually put people on Mars, if you manage to inhabitate Mars with a colony, I know this all sounds deeply science fiction, but if he does that, and if he takes the valuation of the company to a certain level, he stands to gain another $1 billion in bonus shares. So again, that will sort of lift an already very wealthy man into a very different stratosphere.
Bloomberg's Benedikt, Kammel and Ryan Gould, thank you very much. The SpaceX prospectus asks investors to believe in three things: AI in space, 1 million people on Mars, and Elon Musk's ability to make it all happen. But that's also what great IPO storytelling is supposed to do: sell the investors on a future that doesn't yet fully exist. Joining us now is Lauren Webster, Piper Sandler's head of investment banking. Just state off the bat, Piper Sandler is not involved in this IPO, but you know this industry, you know how an IPO works, and this will be the biggest IPO of all time. When you read that document, as far-fetched and out of this world as it was, what were you thinking?
I was certainly thinking aspirational, visionary. But let's unpack, for starters, the TAM that you spoke about.
Right. Okay, so you have this document, and you have to say something.
Yes.
And what you say is, we see a world where the market ahead of us is $28.5 trillion, but $26.5 trillion is just AI.
Yep. Yeah. So two observations. First, I think every prospectus has a very lofty TAM in it. So this is not out of the ordinary. It truly is par for the course. The second one is every company going public wants to be able to tell investors we have multiple ways to win and multiple TAMs to be able to touch. So yes, huge numbers. We can kind of quarterback, Monday morning quarterback, what's right, what's wrong in there. But it is saying to investors, we have multiple paths here to really meet that growth outlook that you're investing us to achieve.
Is it believable? The TAM number? Any of it?
I don't know if I've fully, truly believed any TAM put in a prospectus, and I've always been able to poke holes in it. I think probably the one that was the biggest gap for me is really that enterprise application wedge in it. So you saw a very sort of rational stair step. The enterprise application one needs a lot of unpacking, but I think that's part of the story here is that there are really three core pieces, and each of these are going to be foundational to the future of how enterprises deliver services to their customers.
I think what SpaceX is arguing through xAI, which is part of the story, it owns xAI, is that they are going to take on your OpenAIs, Anthropic's, Google's in the market for agentic AI. They talk about how white-collar work will be transformed. But is the TAM, even from a potential investor's perspective, calculable? Whether you believe it or not, there has to be some math involved on how SpaceX would get into that market.
Yeah, look, I think they're already delivering in some of those areas.
Right.
Certainly on, let's just take the xAI piece and what they're doing with the Colossus data centers and now having Anthropic come in as a key customer there. But that is a market that we are going to hear over and over again throughout this year. You mentioned OpenAI IPO coming up potentially. Really large TAM numbers because it really does touch every part of the enterprise ecosystem and then flowing down into consumer daily life.
We maybe should have started here, but why does the preliminary prospectus matter? What is it that needs to happen, in convincing the market to participate in this IPO?
Yeah, so a good question, and a few areas where it's really critical. One is the storytelling, and I think unpacking that story, there's three core parts that we've talked about in terms of what are you investing in. You're investing in a core space business, really the foundation of SpaceX. Launch rocket where they have a tremendous leg up on the competition and have really bent the cost curve associated with the future space economy. Two is really telling the story around autonomy and connectivity for that autonomy at the edge with Starlink, and that we as Starlink are going to be able to power the connectivity required for everything we're going to do with autonomous vehicles, robots, go down the list. And then three is really the AI piece. So that's the storytelling. And then, of course, you also have the numbers behind that, risks associated with it, and informing investors of what they're getting into. But first and foremost, telling that story.
Prior to the offering, Elon Musk has 85.1% voting power. based on the structure of the shares. Historically, in big IPOs, how has that been a factor?
Yeah, so you've certainly seen across the tech industry these, dual share classes where founders retain significant, if not nearly total control in terms of what
super voting share class.
Exactly. I think for Musk in particular, he has a very long leash with investors in terms of capital-intensive projects. In part because what he's delivered with Tesla, what he's been able to do in the space economy today. And so while, there is some potential caution, it's not unexpected that he would retain this type of control, and we've certainly seen it in prior tech IPOs.
We just have about a minute left. What do you think is going to happen? How do you think this is going to go? Draw on your experience.
Yeah. So a few things. I'm really looking forward to the Starship launch this evening.
How critical is that?
I think it is important. It is not binary. What it does is we're already seeing tremendous investor enthusiasm around the SpaceX IPO. I think that enthusiasm holds. Even if Starship doesn't go up, Musk and SpaceX have primed us to understand there is failure when you're doing big things. But if it goes well this evening, I think that creates even greater enthusiasm and sort of creates the crescendo around this opportunity, which is, of course, what he's hoping for.
Lauren Webster of Piper Sandler, post SpaceX S1. Terrific. Now, coming up, by the way, the world's biggest company, most valuable company, reported earnings last night. You may not be aware, but we got T. Rowe Price's Tony Wang to break down Nvidia's earnings results and get a real investor's reaction. That's next. This is Bloomberg Tech. Reality check for Nvidia. Shares now down 2%. We've been flat for most of the pre-market. We kind of had choppy trading swinging between modest gains and modest losses early in this Thursday session. After actually a strong forecast and a pitch that Nvidia is diversifying from the data center giants. Jensen Huang said on a conference call with analysts that from robots to robotaxis and every kind of startup in between, quote, we got it all covered. But investors have become harder to impress. Joining us to break it all down, Tony Wang, portfolio manager of the T. Rowe Price Science and Technology Fund, and across the firm in different guises. T. Rowe, a big investor of Nvidia's. Okay, let's start. $91 billion, plus or minus 2% in the second quarter. It was like almost the whisper number for the sell side and the buy side, but not enough. And why is that?
Hey, look, I think that the growth at this scale is just unprecedented. I don't think the market's ever seen anything like it. And I think if you think about traditional semi-investors, the playbook is to sell this type of growth, right? Because it's not sustainable. The margins have peaked. But I think if you really look at what's going on at the driver of the driver, like what's going on in the end demand, I think it's like really phenomenal in terms of agentic AI really taking off. The time of work or like time of task is expanding instead of being one shot or the agent working for a few minutes. I think we're going to go towards like months of work, and that requires like a lot of compute to have an agent go off and like complete a task and think and be persistent. And then this other thing is I think that scaling laws continue to hold. Like the frontier models are getting better. The more compute you throw at it, the better they get. And you actually save money by being on the frontier because it doesn't go through so many rabbit holes in terms of trying to complete your task. So I think if you look at like the end demand, it's actually very encouraging. And I think we're climbing a wall of worry here as a result.
So the thing that I was trying to digest throughout the call is with the data points that Jensen Huang and Colette Kress put forward as evidence of that, right? The scaling laws and the dollar per token. And they go to this $1 trillion figure, which I think they clarified is Blackwell-Rubin, and it's for calendar year 2025 to 2027. And it's basically a backlog, right? But the main overarching point is that they would argue that NVIDIA's own growth is trending ahead of even the hyperscale capex growth. How do you model for that? Like, is that the math that you would do?
Yeah, one of the things that was really encouraging, I think, of the quarter is that I actually broke out like hyperscale versus the enterprise and sovereign. And so, I think the bear case is that, Nvidia can't outgrow the hyperscale CapEx numbers. But there's all this new TAM that's emerging that's not hyperscale. And, I think they continue to do well in hyperscale, but there's also new areas of agentic enterprise adoption. I think talk to financial services firms, they're adopting a lot of this end demand that Nvidia is producing. And so I think that plus robotics that's on the to come in the future, I think that allows them to see not be bracketed in this like hyperscale kind of compute paradigm here.
Tony, slightly unusual situation, but I spoke to Jensen at some length on Monday prior to earnings, but actually a lot of what he said about the demand supply equation was very prescient, salient. Just listen to what he said.
We have the largest supply chain in the world. Our partners have done a great job securing supply for us. And so all of the pieces go together. The silicon photonics is lined up. Everything is all lined up. It's just that the demand is much greater than the overall capacity of the world.
If you are a student of technology history, finding yourself in a situation where demand is vastly outpacing your ability to supply, even in a world where supply chains are doubling or quadrupling per annum, which is what he went on to say, that's been an enviable position. But right now, it's not moving the needle for this stock.
Yeah, I mean, I think that the market is looking at relative earnings growth and where the bottlenecks are. So capital's flowing there. But at some point, you look at the multiple for Nvidia, it's like really attractive. And in addition, like there's a point where, for the growth, it is like tremendous. Looking at the PEG ratio, the expectation. So if the growth is durable, I think you could see multiple expansion actually from these levels, and that's pretty exciting for holders. And in addition, like it is the platform that a lot of this AI inferencing is going to be built on. I think inferencing is going to be much bigger than training, and training is also still growing because of scaling laws. In addition, I would say that like at this valuation, they are doing a capital return program. And so I covered Apple and Nvidia for T. Rowe, and I was super lucky to get that. And I saw like, what Apple did with the return program. It didn't like, re-rate the stock from day one, but over time, consistent capital return at that valuation really expanded the multiple. I think with Nvidia, it could be a similar story where it becomes less cyclical, more durable as a result. So I think it's, they're doing the right things here with the disclosure as well as like, with the capital return program. And I think it's just a matter of time here.
I think right now Nvidia's trading at like 22 times forward 12-month earnings, right? I think I'll double check it. Something you just raised is really interesting, which is basically use of capital. So the frustration with Apple is like, do something. And maybe that story is changing with Apple in the handover to John Ternus. But Nvidia has gone out there and invested in the ecosystem in small increments, $2 billion here, $2 billion there. How does Tony Wang read that strategy of investing?
Yeah, I think it's really smart. I mean, I think that when you're at the frontier of technology, you have to build the ecosystem and bring up the supply chain, bring up the partners. And, Nvidia has been really smart in terms of using their free cash flow to extend that. It also builds their ecosystem as well as furthers the technology frontier. So I think it makes a lot of sense. And you look at the deals they've done in the private markets, they've been pretty good. So like great for shareholders, great for building the ecosystem, and they have excess cash still. So I think that just goes back to like they are like this single architecture platform, and there's tremendous leverage on it. You see where the margins have gone, and so that's been their whole bet from like day one. I think is that they're an ecosystem company, right. And I think you're seeing it play through here as they build it out continuously.
We actually have a VC on later in the program whose portfolio companies, are so tied to Nvidia, and we'll have that conversation. Just to close the loop, by the way, Nvidia does trade 22 times forward earnings, but historically it's like nearer to 34. Jensen has this equation: more compute equals more tokens equals more revenues. Do you see those revenues coming out the other side for all of Nvidia's customers?
Absolutely, yeah, definitely. I mean, you look at like the cloud demand, you look at pricing for GPUs. I mean, these are like old GPUs. Pricing's holding up phenomenally well, and you look at like the enterprise demand inflection that's happening, and you see it. We see it in our own company. We're developing AI solutions, and it's eating up a bunch of tokens. Where we see the promise. Obviously, there's experimentation.
Hey, Tony,
but I think you're seeing that like come through.
Just real quick, like on the socials, that's what people just go nuts over, right? H100 pricing right now. Like, are you tracking that?
Oh, yeah. I mean, I think you think about the bear case, 24 months ago, it was that like the obsolescence of NVIDIA GPUs is like 3-4 years. Well, first of all, the warranty on these things are 3 or 4 years. And then also, you have that depreciation. And so you're able to like adjust the pricing, but even so, like the demand's been so good that, we're seeing more value coming out of the older GPUs and even A100s. People are using them.
Even A100s. If you're out there running workloads on A100s, give me a call. I want to know. Tony Wang or T. Rowe Price, back on BTech. Thank you so much. Now, coming up, we're going to hear from Airbnb CEO Brian Chesky, actually on the company's use of AI models from China. That's next. This is Bloomberg Tech. The CEO of Airbnb has defended his company's use of open source AI models from China. Last month, a congressional committee asked Airbnb for more information about its use of these models as part of a broader investigation. The committee says it has concerns about the implication for Airbnb's American customers. Here's what Brian Chesky told me in response to that yesterday.
We are not a customer of those companies. We're using a variety of different open source models. I just want to say a few things about this matter. Number one, data and privacy is most important to Airbnb. I think anyone who knows Airbnb knows we have an outstanding track record on data security and privacy. Number two, all of our data is vaulted. No company has access to our data. It is vaulted in Airbnb. Number three, the congressional committee has reached out to us. They said they have some questions. We said we want to cooperate. And so we're in direct contact and cooperation with them.
Airbnb CEO Brian Chesky in a conversation yesterday. How's everyone doing out there? Let's take a quick check on the markets. And it's taken a little bit of time to kind of find the story. Nasdaq 100 is now down 0.5 percentage point. The SOX is basically flat. Nvidia is now firmly lower, down 2%. But actually, funny enough, Walmart in its earnings is the biggest points drag, at least on the Nasdaq 100. We have a lot more to come in the program about Nvidia, about the historic SpaceX S1, and a whole lot more. Stay with us because it's halftime in the program. And this is Bloomberg Tech.
The world is rebuilding computing for agentic AI and robotic physical AI. NVIDIA sits at the center of these transitions.
Welcome back to Bloomberg Tech. That was Nvidia CEO Jensen Huang speaking on the earnings call from fiscal second quarter financial year 27 earnings. One of the big takeaways from Nvidia's earnings was the rise in demand beyond the hyperscalers. Bloomberg Intelligence writing that it was a more important signal for the future than Nvidia's signature beat and raise. The author of that research, Bloomberg Intelligence's Kunjan Sobhani, here with us. What is the world outside of the hyperscaler? What are we talking about? Some people would say, oh, this is about companies big and small building on-prem, right? And that Nvidia is going to have this whole new customer list that is of that size. It's hard to see. Give me the full thesis.
Yeah, that second segment is very fragmented, but people keep missing because it's very diverse. So first of all, it has Sovereign, right? Which is itself driving billions of dollars of revenue. All of the AI neo clouds. So when we look at the space in the AI neo clouds, that keeps on growing higher and higher. And they are becoming now a significant spender of CapEx, which does not get captured in most of the CapEx discussions from the public clouds that we hear. You have all of your AI labs, up and coming enterprise and industries deployment of on-prem AI, as well as these data center guys who run the data centers are now becoming much more high GPU-based AI data center cloud renters. So this 50%, which is expected to grow faster than the top hyperscaler segment, by the way, is getting more and more significant, especially for Nvidia, because this is where you have the least competition. The ASICs and the TPUs and the Trainiums don't compete in this segment. So it's purely monopolistic for Nvidia. Nvidia gets the highest stack attach rate, means they can sell a lot more of their networking and their other components here, and they get the best margins in this segment.
I think during the call, there was an attempt to clarify that kind of mysterious $1 trillion figure. So it runs calendar 25 to the end of 27. It is Blackwell and Rubin systems, but it excludes Vera CPU and some of the other networking components you were just talking about. I always come to you always have your feet on the ground, right? It doesn't really matter what the number is that hits on the second quarter, 91 billion plus or minus 2%. That number, the 1 trillion, give me your kind of like base level understanding of it.
Yeah, all it includes is just the Blackwell and the Vera Rubin, the full stack that is going to start ramping in 3Q. That's all it includes. It does not include, like you mentioned, the 20 billion CPU standalone that they mentioned, right? For 26 and 27. It does not include the Grok-based LPX server. It does not include the new launch of their storage-based CPX servers and a few other networking components. So a lot of good creamy revenues are not included in that. The 1 trillion number, by the way, based on our estimate, is rising. So we think now it will be an upside to 1 trillion, plus all these other list of items that I outlisted could be an upside to that for revenues.
Kunjan Sobhani from Bloomberg Intelligence. Your research is always the go-to, man. Thanks so much. Let's dive deeper into the Nvidia story, but also like the market reaction with Anna Rathbun, founder and CEO of Grenadilla Advisory. You know, we get ourselves into these frenzies where like the Nvidia earnings, they're going to hit, and they hit, right? And you get the red headline on the Bloomberg, and it's $91 billion plus or minus 2%. And then everyone goes, but it doesn't even matter what the number is. It's everything else. You're in the markets. Why do we behave like that?
It's lonely at the top. I mean, when you're the largest company in the world, I don't think there's anything you can do to surprise investors to the upside. So you become a company that needs to defend itself. Nvidia hit it out of the park in many ways, in almost all the ways that we expected them to, not only in the top line and earnings, but also, networking business growing as well as diversifying its customer base. Everything we've asked for, they've given us. But I think there are other things like, is the growth actually slowing? Is the growth what we've been expecting for the last 2 or 3 years? And that's the question that I don't think Nvidia was able to answer. And the dividend increase, to me, was a big signal that what the investors had been worrying about might be coming true.
Okay, I apologize to my team in the control room. I'm going to do the opposite of what I just said.
Okay.
Let's linger then. Let's linger on the shareholder returns. What were you getting at there? Give me a little bit more.
Yeah, so, the buybacks, it's not that big because if you're, multi-trillion-dollar company, 80 billion isn't that huge.
I see.
It was really the dividend side of it. When a company starts to return dividends, that's a multi-year commitment, right? So that means, well, maybe we're not going to be finding other areas to invest in. We're just going to be returning some cash to the investors. And that's a signal for growth companies that says, okay, maybe we're not going to be growing as fast as you had anticipated. So that was a small signal. We'll see what happens. I still think Nvidia is going to continue to grow because of this massive ecosystem they're at the center of. But it was definitely a signal, maybe a small one, but a certain one.
We're showing this image on the screen, right? And we went into this earnings prior to them hitting saying two things. Everyone expects a beat and raise situation, but also it doesn't really matter historically what Nvidia says. That data, I appreciate there's a lot there, is how the S&P 500 trades in the days and months that follow an Nvidia earnings, even when they beat big. And there's no guarantee that the market is going to sort of respond with euphoria. Does that matter anymore? This kind of story that at the index level, given Nvidia's size and scale, that was kind of what we were all bracing for.
Yeah, I mean, it matters because of its size, right? The largest company behaving this way, it's going to have an impact on the index. Now, this reminds me of how Apple used to behave about 10 plus years ago. There was nothing that Apple could do to satisfy investors. The market would actually punish them for it. So I think this is just what happens when you are at the top and you have investors have high expectations of you. And if you happen to have a high concentration in the index, you can take everyone down with you.
It's really, really tempting always to look at how a stock trades in the moment and try and find the story. But what I would also say is that, if you think about last Friday, Monday, Tuesday, when the president of the United States returned from China, Nvidia and the sector, the stocks, were close to correction territory. We're down again now post-earnings on Nvidia. What lesson would you learn from that?
There are two things I think. The reaction today really is about NVIDIA itself. It's not even about the AI industry. It's about NVIDIA. Friday was a huge disappointment. And since then, we've learned that China actually banned the gaming chips while Jensen Huang was there. So when we're looking at China and NVIDIA, it's not a reliable market as much as is the market that we would like to be in. So it is, I think, right for Jensen Huang to sort of pay attention to other areas in which they can expand. Think about sovereign AIs outside of China, really. And I think China would be sort of a bonus, an upside optionality if it happens. But that if is a very big if.
Anna Rathbun, founder and CEO of Grenadilla Advisory, thank you very much. Now, coming up, we're going to be joined by Sarah Guo from Conviction to drill down on kind of the impact of NVIDIA on a much broader ecosystem of startups. These are companies of all sizes that use the compute or the library of data and models themselves. Can't wait. This is Bloomberg Tech. Let's get back to NVIDIA earnings. A part of Jensen Huang's latest message to investors, NVIDIA isn't just selling chips to big tech anymore. It's applying the picks and shovels for an AI gold rush where startups are building everything from AI agents to humanoid robots, robo-taxis, everything in between, but on NVIDIA compute. Joining us, one of the key backers of that ecosystem, Sarah Guo, founder of Conviction, an AI-native venture firm. And I think that's true. Right? I think the best place I think to start with you is think about all your portfolio companies. Many of them come on this show and we say, okay, what's the biggest constraint on you right now? Where are you most focused? And oftentimes it is compute. And they're sometimes super proud that they are working on NVIDIA gear. But are they accessing that compute through a cloud provider, or are they able to get the cluster themselves, direct control?
It depends on what they're trying to do, right? We have companies that are building at the infrastructure layer, building at the model layer, building at the application layer.
Right.
One of the first things we did when we started the fund was go buy compute for our companies, just because we can take the timing risk as a venture fund, and we concluded exactly what you just described, which is they're all going to need it, right? And
what did that look like, Sarah? Sorry to interrupt you, but literally,
yeah, we went and bought. H100s at the time,
wow.
Like a bunch of nodes, cloud. But the point was the market has gone through different shortages, and now people are predicting a lot of ongoing constrained supply. And we were worried about access for startups in that period of time, which is why we did it. But our companies, to your actual question, if almost all of them want to do experimentation, and they all start with frontier performance, which is NVIDIA chips today, right? Because that allows you to do new things. And then as these companies mature, they tend to post-train smaller models, think about cost, think about how to be able to, even just being able to use more tokens on the same task allows you to change the user experience. But everybody wants to start with current generation chips.
The state of play that Jensen describes is demand vastly outpacing NVIDIA, but also in aggregate the industry's ability to supply. On the other side of the table, would you say that that state of play is true for the founders that you're trying to help grow?
It's probably been a 2 quarters of increasing stress in the ecosystem about access to supply at different scales.
Wow.
And so I, have spent a good amount of time with the leaders of companies that, serve NVIDIA chips in cloud, asking to buy $100 million at a time of compute. And I've never been in that scenario before where you're trying very hard to pay somebody a lot of money with a multi-year commitment.
Yeah.
And it just speaks to the shortage dynamics. I think it's very hard to get on-demand, small-scale compute right now, which is what many startups are starting with, as you were describing. And so I think the shortage dynamic is real. And what is more interesting to me is, Nvidia have this amazing outperformance on the earnings side, and Jensen will repeatedly tell people demand is parabolic.
Yes.
Humans struggle to consume that, and it's hard to feel bad for Jensen Huang. Jensen's a winner in all of this, but he's
Thank you for being honest.
But and he's an amazing leader. But he's like, I'm telling you honestly the reality of what I project repeatedly, and you just keep not believing me.
Yeah.
Right? And I'd say I believe him from the demand side, because what I expect will happen is this, massive exponential growth that shows up in things like Claude Code revenue is really because you have long horizon agents that people are using in this one use case already. But the world is not just code. Right. And so if there's small scale, a few billion to 40 billion of revenue in a very small number of months, because we figured out how to use the models more productively on long horizon agent tasks, we're going to do that for lots of different functions in the knowledge economy.
While you're here, if you don't mind, SpaceX S1, wow.
Yes, wow, it's inspiring.
You have a big event today, right, where I believe some of the Cursor guys will be there. And so we learn a little bit about that, but there's this number, total addressable market for AI, $26.5 trillion, super focused on enterprise. They literally label it as such in the deck. Go ahead. I mean,
yeah, I think it's a funny number, and then a funny diagram when you visualize the TAM, because it's like Starlink and then enterprise AI.
Yeah.
And much of what we invest in is enterprise AI. My friend Andre Karpathy described this well, which is the simplest way to think about the use of AI is automation. Right, is automation of tasks we already do.
Right.
And if we give these models the tools and the harness such that they can do these tasks, they can take over things for us. And so I do think that the opportunity is as big as Elon
Does
says
Elon
it is.
believe the opportunity, or is this him trying to justify why SpaceX took XAI?
I think it's interesting that what you put in the S1 is a choice. Right. And he could have easily just said, something broader, or, focus on other parts of the SpaceX TAM overall. But he's making a commitment that we are going to go make, our offerings relevant in enterprise AI. And so I think he's very committed to
Yes
this.
or no? You think he will pull it off?
So there's a question about whether the value is infrastructure, models, or applications. And see this in the Anthropic deal and the Cursor deal as well. They have the infrastructure and the capability to build more is extraordinarily valuable. And I think the question will be, I think he's going to make money on that no matter what. The question is, do they also need to own the model and the application layer?
To Sarah's point, the S1 said that Anthropic would pay SpaceX $1.25 billion per month through 29 for compute. Sarah Gore of conviction across every part of it. Thank you very much. All right, a lot more to come still in the balance of the program. We're going to be breaking down two blockbuster IPOs on the docket. Two, SpaceX and OpenAI? Maybe. This is Bloomberg Tech. Let's get back to SpaceX. In addition to the company's blockbuster IPO filing, investors are also closely watching tonight's highly anticipated Starship launch. The mission marks SpaceX's 12th major Starship test flight, a critical milestone as the company pushes to advance its next-gen rocket program while preparing for what could become the biggest IPO in history. Bloomberg's Sana Pashankar joins us now. And you're probably sick of me, right, Sana? Because how many times did I post in the blog, Starship is central to all of this? It said it in the S1, could not be more clear. Let's start with tonight's test. What are we expecting? What does it look like? How long does it run for?
Right. So today, Starship is slated to take off from the launch pad at Starbase, Texas, at around 6:30 p.m. ET, 5:30 p.m. Texas time. It's going to take off, ignite its Raptor engines, and lift off into space. It is debuting an upgraded version of the vehicle. It's called version 3 that has upgraded engines. It's supposed to have improved power and capability. It's going to, lift off into space, lap around the globe, and then eventually splash down into the Indian Ocean. And, as you were mentioning, Ed, this is a really crucial test for this vehicle that is just, so important for all of Elon Musk's ambitions for SpaceX and, the valuation of the company for the coming IPO.
So let's talk a little bit about those ambitions, right? The idea is that Starship is capable of carrying a much greater payload to orbit. So think Starlink, think space-based data center and humans getting to Mars. Explain it to us.
Yeah, totally. So, Starship has kind of the payload capacity that will enable something. Let's start with orbital data centers. It will enable an orbital data center of, as many as 1 million spacecraft orbiting the Earth, which is what, SpaceX has said they want to do. You can't do that to scale as well with the Falcon rockets, their current rockets. You really need a much larger vehicle that can carry 60 satellites to space. And so, they will need Starship to effectively build these orbital data centers at a timeline and a pace that really makes sense and could actually lead to a profit one day. To get humans to the moon and Mars, you will also need, that type of capability, that type of thrust. Starship is advertised as the most powerful rocket ever built. And, Starship is so important to SpaceX's ambitions, but it's also key to America's space ambitions because Starship has a contract, SpaceX has a contract with NASA for Starship to land humans on the moon.
Bloomberg's Sana Pashankar, thank you very much. Fresh off a courtroom win over Elon Musk, the race for the $1 trillion AI mega IPO is on. Did you have this on your bingo card? Sources say OpenAI may make a confidential filing as soon as this Friday. Joining us now with the details, Bloomberg's Shirin Ghaffary. Yesterday afternoon, it's the last thing anyone needed was to see that headline hit. But the timing is interesting. What do we know about an OpenAI path to an IPO?
That's right. So an OpenAI filing, it would be a confidential filing, could come as soon as Friday or in the coming weeks. That would obviously put it in close competition with Anthropic, which is also expected to potentially file this fall, as well as SpaceX, which is already out there with the S1 listing.
Yeah, I'm going to let us put SpaceX to one side for a second. So let's say it's a race between OpenAI and Anthropic for September or October. What do we know about that timeline, but also the numbers involved, right? Do we have a sense of valuation or what either company wants to raise?
That's right. So the valuations are already, nearing $1 trillion, right? OpenAI was last valued at over $850 billion just earlier this spring. Anthropic, similarly, also, in talks to raise at up to 900 valuation, as we've reported. So when we're thinking about an IPO months out, you can only, you would hope that for these companies, at least they're thinking they want to go further north of that, getting us closer to potentially that $1 trillion mark.
There's an idea that when Elon Musk was told by the jury and judge he's not allowed to proceed with his suit, it removed an overhang to OpenAI, let them kind of proceed with their ambitions. But why does OpenAI want to go public? I know it seems silly, but do they need money? Is it the public perception thing? Has it always been in the plans?
It's a good question because on the one hand, these companies like OpenAI and Anthropic can command these massive private financing rounds that we've never seen before, unprecedented levels of cash. However, access to public markets allows them to do that with much more ease, frequency. It also allows everyday people to get in on the AI boom, or bust, which is the risk, right, if it does change. But that also, then potentially is allowing a larger group of sort of retail investors to have a stake in the company. But really large pools of capital being more easy to access without all the funding round, song and dance, I think helps them.
Bloomberg Shirin Ghaffary, all over the OpenAI and the Anthropic story, and will be for the rest of this year. That does it for this edition of Bloomberg Tech. This is what markets look like. Not too much going on at the index level. Basically flat. Nvidia is down 1.5%, but in the background, there's still this idea that the big one is coming, SpaceX's IPO. This is Bloomberg Tech.